Hi, everyone. Thanks for tuning in. My name is Dana Moody, and I'm a member of the Index Sales Group here at FTSE Russell. Just to set the stage for today's discussion, we'll be touching on recent trends in the marketplace that has led to an increase in adoption of international equity ETF by investors. I have a great panel that's going to touch on this topic. Starting to my left, we have Catherine Yoshimoto. She's a director of equity product here at FTSE Russell. We also have Andrey Kotlyarenko. He's a senior equity product specialist at Vanguard. And lastly, we have Mark Barnes. He's the head of investment research Americas at FTSE Russell. And as I alluded to, we'll be touching on recent trends as it pertains to international equity ETFs. So let's dive right in. Over the last year, we've seen, a recent uptick in investor adoption of international equity ETFs. A lot of that has been outsized performance relative to U.S. equity markets. I think a couple key items we want to touch on, what trends we're seeing with clients in terms of how they access international equity ETFs, and what are some of the broader trends that are taking place. I'll start with you, Andrey, to get the client view.
Yeah, thank you, Dana. And you're exactly right. With the change in performance for the international markets, where the international markets we're now seeing outperforming U.S. market for the first part of 2025, definitely fueled some of the additional flows going to the international markets outside of the United States. It's still nowhere close to where the U.S. flows are, but if we look at sort of trajectory of the international flows over the last 4 years, it's definitely an upward sloping line, right? And if we were to take flows year to date for 2025 and project it toward the end of the year, we're expected to surpass well over $100 billion, which is about 30 to 40% growth compared to the years prior to that. Right, so some of the trends that we're seeing and where those flows are being directed, they're a little bit different than what we're seeing in the U.S. market. In the U.S. market, there is some preference for more a segmented approach, right, where people using more of a building blocks, separating their growth and value, separating large, mid, and small, where on the international side, still the broad preference is broadly diversified products. We're talking about total international, developed markets, and even though there has been some concerns over geopolitical risk, we're still seeing pretty strong flows going to the emerging markets as well. Now, even though majority of the flows are directed to the broad blocks of assets, we're still seeing some flows directed to growth and value in the international side, as well as the single country like India and Japan. And this could be an early indications that if the strong performance of the international markets continue, this where some of the international flows could be directed further down the line as people get more comfortable to a more segmented approach, whether for longer term strategic views or sometimes shorter term, more tactical allocations. One thing that I also wanted to add is the big overarching theme that's kind of been directing a lot of the activity over the last 5 to 7 years is definitely a strong preference toward ETFs. This is both US, international, active, passive, where we continue seeing on the mutual fund side outflows for across all of the segments.
Thanks for providing that perspective, Andrey, from a client view. Digging deeper on that point, what are we seeing from FTSE Russell clients, Catherine?
Thank you. I would agree with a lot of Andrey's commentary around the popularity of broad, global, and developed strategies and even emerging markets. And again, despite the geopolitical concerns that, might be plaguing some countries, there are pockets of growth. Just like Andrey said, India has been an interesting country. There are other emerging markets that have come to the forefront more, such as Taiwan, and along with some of the AI potential as a diversifier, to offset some of that concentration in U.S. Magnificent Seven companies, for example. So yeah, there are different approaches across FTSE Russell's clients, and you can see this playing out in the international equity space and seeing more segmentation. I think the size of China being as big as it is as part of the emerging markets, it really does lend itself to more targeted exposures. As well as, thinking about different ways to segment the market. I would say in terms of the trends, if you look at the assets benchmarked to FTSE Russell's indexes over the past decade, you've seen the asset grow double compared to 10 years ago when FTSE and Russell merged. So, you've seen this trend across the industry. Passive had always been a pretty a significant portion, meaning almost a quarter. But I think the dollars tracking the assets, in the passive, we went from a little over $2 trillion 10 years ago to now $5 trillion in passive assets tracking a FTSE Russell index. So you can see just how much the popularity has grown. But also to Andrey's point, it isn't just about passive index funds. It is ETF as a vehicle is providing an opportunity for active managers to put their strategies into an ETF wrapper, which is widely recognized as efficient. And we're seeing the ETF package being used more globally as well in other markets outside of the U.S. So, but then there are considerations as you look at regulation. There might be risk capping that investors might want because of regulations in certain markets. For example, in the United States, the registered investment company, the RIC capping, may require some capping methodologies to be applied, as well as UCITS capping in the European region. And UCITS vehicles are distributed globally, as well as not just in Europe, but also in Latin America or Asia. So, it really is an interesting time, and we're seeing this growth occur across the ETF industry. I will also add that, I think for certain types of investors that have a sizable assets, separately managed accounts might be a possibility for those types of clients. And we're seeing in this area, the clients who can access SMAs, direct indexing. So they look at the broad portfolio and apply their thematic views into these more targeted portfolios. So those are some of the trends that we're seeing from FTSE Russell.
All right, with that, I want to thank our panel for joining and providing great insights into recent market trends in terms of increased adoption of international equity ETFs by investors, but also best practices for portfolio construction to gain exposure to some of these market themes. Thank you.